thank you to Birmingham Tech Week for hosting this talk and giving us right at the beginning of the day as well, which is a great position to be in. I think Birmingham Tech Week just want to raise who they're associated with, which is the West Midlands Growth Company and the Department for International Trade and Tech Nation. And they've also got a set of other sponsors which they want to thank for their support in bringing Birmingham Tech Week to Birmingham this year, or virtually to Birmingham this year. And there's another set of sponsors of all the good, great and ugly of the local area. So to begin with then, my name's Stuart Bowles and I'm a PhD candidate at the University of Birmingham and co-founder of Parity Network Limited, which is a spin-out company of the research that was conducted at the university. What I thought my talk would be associated with is basically how this research has been formed and then turned into Parity Network. And I thought I'd draw this together by asking the question, can a local digital currency support innovation and collaboration between entrepreneurs in Birmingham? So this morning's talk, which I think we'll maybe try and wrap it up in about 45 minutes, and then anyone can answer any, ask any questions. But I thought I'd break it into sort of 4 key areas. First, I'd give you a bit of theoretical background of understandings of money and currency. And I think that's quite useful to start to understand how alternative currencies are structured and why they succeed and why they fail. So the first part is just to talk about those kind of understandings of money and currency. Then we'll talk about some of the structures of the more well-known alternative currencies that exist in the UK market. Then I'll introduce an alternative currency, which is a business-to-business mutual credit system. And then I'll talk about the development of parity over the last sort of 2 years or so. So you can join in the conversation. So we've obviously got the chat that's on the Zoom, which if you want to ask a question as you go along, feel free to do so. I've also got 2 colleagues who are supporting me and they may answer the question. You can also tweet on parity_network and you can follow us on Parity Network on LinkedIn. So to begin with, on a theoretical background, I think it's useful to understand how alternative currencies are designed by thinking about what money and currency is and where it originally came from. So I think we'd just begin by a sort of a whistle-stop tour of some understandings of money and where it came from, which maybe allow us to be a bit more critical about alternative currencies and why are they structured in the way that they are. So when I've done presentations like this in front of live audiences, when I ask this question, there tends to be a bit of a murmur and you tend to get people say, what came before money? Well, it was barter, of course. So the idea of barter is that before a medium exchange existed, individuals would grow food, cut down trees, rear animals, and these would act as commodities, and they would go find other individuals who wanted to trade those commodities with one another using other commodities. And this notion of a kind of bartering of commodities is kind of a foundation of people's understanding of where money originally came from. Aristotle in Politics talked about bartering within barbarous nations, and Adam Smith in The Wealth of Nations talks about the development of money from barter. How these people understand the development of money is essentially that us as individuals would have lived in our huts, we would have grown food and we would have reared animals, and then we would have found other people that wanted to trade these commodities with us. And over time, the kind of invisible hand of the free market would have decided that there's a certain set of commodities that were more exchangeable for other commodities than others. So, in this simple case, potentially over the course of time, tobacco leaves, gold nuggets and fish might have developed as the most exchangeable commodity, and then over time again Gold nuggets might have been the thing that people were happy to exchange. So if you were going to go and find someone to trade with, you would probably take some gold nuggets, because you know that that person most likely will take gold nuggets. And then over time, that would be stamped into coins to make it easier to trade with. And the story is associated with this development of money from commodities as a commodity. Now, what the problem is with this story, and what the problem is with the notion of barter, is that if you look back through history, we find no historical or anthropological evidence that barter ever existed. And from that, the idea that money has emerged from it, again, has been never seen or described. When Adam Smith was writing The Wealth of Nations, obviously it was colonial times. You had explorers going off around the world. You had, early researchers going off around the world looking for these supposed societies that were trading commodities and goods between themselves to sort of facilitate like economic transactions. This point was actually quite raised elegantly in a recent book called Debt, the First 5,000 Years, which is something that's interested in you. This is the first thing I would really stress that you'd go away and read, or you can actually listen to the audiobook free on YouTube. And this is by Professor David Graeber, who fortunately actually passed away only a month or so ago. And he devotes 2 chapters to this, calling it The Myth of Barter, and explains why people think that money developed from barter. And then this is a myth that's sort of been reproduced over the years, and how that affects our understanding of money today, that if money developed as a commodity out of barter, then it's an understanding of what money is and what we use it for today. So if money didn't come from barter, where did it actually arise from? What is money, and where is it come from? So all historical evidence and anthropological evidence show that money actually developed as credit. And what I mean by this, I'll do a simple example between Pete and Mo. Under a barter economy, if Pete wants Mo's apple, he'll have to trade him with fish or another commodity. When actually what used to happen was, if Pete wants Mo's apple, he would write him an IOU saying, Mo, I want an apple, here's an IOU. And then Mo has got something that later in the year, he might like the look of Pete's sandals, or some sandals Pete has made, and he might be able to go back and say, Pete, I'd like your sandals. I've got this IOU that you wrote earlier in the year. That being said, it might be that actually Mo wants Sal's pots, and because Pete, Mo, and Sal all live in the local area, or they live in the same community, and again, all historical evidence suggests that humans evolved in sort of packs of 50 to 100. We lived in tight-knit communities. We all worked together to get through the harsh, cold winters. This idea that we kind of worked together, and when we needed to trade amongst each other, essentially we passed around IOUs. They weren't written on paper. They could have literally just been favors. I helped you with your roof earlier in the year. Now, please give me the same amount of work on my crops for harvest this year. And again, in this situation, Mo wants Sal's pots. Sal trusts Mo. Sal trusts Pete. So she's happy to accept Pete's IOU as payment. And she could go back to Pete and say, I want some sandals, or she could use it for another thing, or again, this process could continue. She could be passing this IOU around in the local community, and as long as they all trust each other and they all trust Pete, then they're more than happy to accept the IOU as payment. So if we look back through history, and from say the earliest records of sort of ancient Mesopotamia, a lot of early writing is actually debt and credit contracts, who owes who what. And again, what famous monetary economist Professor Hyman Minsky said, that anyone can create money. The problem is to get it accepted as payment. So the point here is that anybody can write IOU on a piece of paper, but if I take that IOU into McDonald's and try and buy a Big Mac meal with it, they're not going to accept it as payment. And if you look at commerce and economies through the medieval times, what was actually exchanged was something called tally sticks, which is what's on the right. A tally stick is a piece of wood that's literally taken from a tree, and a contract is written on the tally stick between two parties, and then that tally stick is broken in half. And the reason it's done that, it's an unforgeable like piece of like artifacts. There's no way that those two pieces of wood can only fit together with those two pieces of wood, so they can't be forged. So if I wanted, again, somebody help me with my roof, we could write it on a tally stick, break the tally stick in half. You know, I pay with the tally stick. The person's got a record that they helped me out, and therefore have got credit. You know, they've received a payment for it, and then that tally stick could circulate locally within the local area. In about the 1100s, the King of England started creating his own tally sticks, and then would accept tally sticks as payment. So if he wanted to pay to get things done in the kingdom, he paid people using tally sticks. And an interesting factoid, that actually the British government accepted tally sticks as payment for taxes right up to the 1830s. And in fact, the Bank of England itself was capitalised using tally sticks, and the ownership of the Bank of England was done using tally sticks. So again, they're like harmless pieces of wood. But what the point here is that when you think of these two understandings of money, the one that people tend to jump to is this idea of commodity money, that it has to have intrinsic value, it has to have gold in it, or whatever it might be. But actually, all of the historical evidence suggests and shows that the vast majority of money is credit money. So where does money come from today? So the average person understands money through more like a commodity lens. So if Mo wants a loan through his business operations, the understanding is that Pete, who's got some commodity money, has deposited this money with the bank, and then Mo's going into the bank and is essentially borrowing Pete's money that's deposited there, and the bank is acting as like a intermediary between two people, one person that's got money and a person who wants a loan or wants credit. And again, this understandings of this is like the development of like fractional reserve banking and such things, where it's based on money sitting in a vault somewhere that's then lent out. Unfortunately, that is not how money comes into existence today. In fact, 97% of all the money that is created, that's in circulation, is actually money that's created by banks as IOUs. And what I mean by that, and I appreciate if this is the first time you've heard this does sound like a nutty conspiracy theory. But how the money works is when you walk into a bank to borrow £5,000, that money, that £5,000 isn't sitting in a vault somewhere. It doesn't exist until you walk through the door, until you've had that loan sort of confirmed. So at the point the loan is confirmed, the bank types figures into its balance sheet. It gives you 5,000 that he's just created, and it holds a liability of 5,000. It holds a deposit of 5,000 that's like the other side of that transaction. And again, think of it like that tally stick. There's two parts to this. There's the credit and there's the debtor. If you didn't know this, actually you're not alone. There's a study in 2016 that found 70% of our elected members of parliament didn't know where money came from. They assumed money was created in commodity type format in the Bank of England or the government, and actually only 1 in 10 of them knew this real way that money is created. And again, don't just take it from me. The Bank of England released a report in 2014 called Money in the Modern Economy, an Introduction, and quite explicitly spells out this is where money comes from. Just as taking out a new loan creates money, the repayments of loan destroys money. And what it means by that, just think of that IOU moving around between those three people. When the guy received his IOU back, he would have ripped it up because the debt is paid. He's paid out the IOU. It's come back to him. He destroys it. And again, that's how money sort of operates in a very simplistic way in the modern economy. So, in a very whistle-stop tour about money, how do alternative currencies fit within this framework? What are the dominant forms that exist within the UK marketplace today? Could they be associated more with a commodity understanding of money or a credit understanding of money? And do they support entrepreneurs? Well, over the last 10 years, the most famous one within local areas was the Bristol pound. This is what's called a convertible local currency. And how people used it was consumers would take their like government money, GBP, and convert it into Bristol pounds, and they would go then walk into local shops and spend it. At the peak of it, they had about 800 local retailers who accepted Bristol pounds, and they did about £6 million worth of transactions. One of the criticisms of it was that it doesn't really make sense from the perspective of the users. Like, if the person's about to go into a local shop and buy coffee anyway, what's the point of converting the money into Bristol pounds to then go and spend it? If the person's already open to sort of spending locally and ethically, then they're most likely going to spend there anyway. And then what was being seen was when the retailers were accepting the Bristol pounds, all they were doing was converting back out into normal pounds anyway to spend. This was replicated around the country. You had Totnes pound, Brixton pound, Exeter pound, and there's a few other sort of schemes around the country trying to replicate this idea that of trying to encourage people to shop locally. But if you kind of get to the heart of what's actually happening here, essentially it's a like commodity understanding of money. That they, to participate, you need to buy the commodity, the Bristol pound, and then you spend it, and then the person exchanges the commodity back at the end for pounds again. So cryptocurrencies, obviously Birmingham Tech Week, this is something that's come up in previous years. Cryptocurrencies make a very strong point that they are a digital commodity, and they operate within these global trustless networks. And they really have achieved some scale over the last sort of 10 years from the original one in Bitcoin in 2008 through some of the bubbles. They've achieved huge market caps. And over the last sort of couple of years, they have become more accepted by institutional investors and people wanting to store wealth. And again, from a digital commodity perspective, that works very well, as long as you're happy with a very volatile commodity to store wealth within. But from a perspective of an entrepreneur or a business, there isn't a huge amount of benefit accepting a cryptocurrency. If in Birmingham we wanted to do a cryptocurrency-based currency, it's no different to me showing up to a bunch of businesses and saying, look, I've got a big pile of gold. We've got this new way we're going to transact with gold, but first you've got to buy this gold, and then we transact with the gold. There isn't any kind of difference, and therefore no real increased sort of benefit of participating. There has been some experiments in the UK to try and replicate cryptocurrency and commodity-like digital currencies. So Scotcoin based in Scotland, Hullcoin based in the city of Hull, and then Kolu, which is an Israeli fintech firm, have tried these models out in various locations. And again, although they've had some success in getting people to start to use it, there hasn't really been a huge scale in, and again, there's not a huge amount of benefits for businesses to participate. And potentially it starts to fall into this trap of those people who invented those currencies potentially understanding money more through a commodity base of understanding of money, when really what we know from historical anthropological evidence that the vast majority of money throughout human history is credit. So why not start to think about structuring alternative currencies based around credit and what potential impacts they could have for supporting businesses and entrepreneurs. So this is where I introduce an alternative currency called the business mutual credit system. So what I'll do now is just go through how they work, and again in kind of semi-simplistic way, where they're working, and again where they are working is there's two very large and scaling networks, one out in Italy, one out in Switzerland, that are applying this credit-based model of local currency. And again, I'll start to have a look at how they help entrepreneurs. So to begin with, and again, it won't all be text, but some basic rules with a business-to-business mutual credit system. So businesses join a trusted network, and again, that's in difference to a cryptocurrency, which promotes themselves as a trustless network. Every business has access to a zero-interest credit facility, which acts like an overdraft, but essentially on a conceptual level, an ability to issue IOUs, to spend IOUs. The alternative currency itself is non-convertible with pounds or euros or Swiss francs. They can spend the IOUs, the credit, anywhere within the network, and they receive the IOUs to repay their any credit they've spent, or they can save for future purchases. So how that kind of works on a sort of day-to-day basis, if you consider a wholesaler and a factory, the factory's got goods worth £1,000. The wholesaler wants that. They might not have the liquidity at hand. The wholesaler could use their balance within the alternative currency to spend. So they've gone negative within their credit line 1,000, and the factory is positive 1,000. So essentially the wholesaler has used 1,000 IOUs, which are all equal to the pound, and the factory has accepted that as payment. And now they've got goods that they can sell on. And again, this only works as if it's in a trusted network. So what you start to see then is the wholesaler could then pass the goods on to the retailer, which is on the left-hand screen, and they might have added a margin of 200. So the wholesaler has sold the goods on, has received a positive balance of 200. The retailer is now negative within its overdraft by 1,200. The factory, which originally was with a positive balance of 1,000, has spent it on some consultancy, received £900 worth of advice, and therefore now has a balance of 100 positive, and the consultancy has 900 in their balance. What's crucial about this is it's additional economic activity. There has been no need to purchase any currencies before participating. Everyone who's spent has used the credit line or has received the currency from someone else who's using the credit line. And what this has done is allowed economic activity to continue even if there's not money in circulation, which I'll start to come on in a moment. So where has this been done? So in the 1930s, in the in the Great Depression, there was the development of the VIA in Switzerland, and they got about 20-25 businesses together, and they started doing transactions using a parallel currency called the VIA franc. This parallel currency is 1-for-1 for the Swiss franc, but it can't be converted. So it's just like an accounting tool. It just allows people to know who owes who what. Every business in this network gets access to a close to zero interest credit facility, which they can make purchases with other businesses in the network. If they want to repay their balance, they have to receive some of the currency to repay the balance. What's fascinating about this was the sheer scale that it grew to, or has grown to. So it being in Switzerland, the figures are sometimes a bit secretive, but a study that was done in 2005 found there were 60,000 SMEs across Switzerland that were using it, and actually that accounts for 16% of all Swiss SMEs, and about 1.5 billion pounds worth. I've done the conversion. 1.5 billion pounds worth of transactions was taking place. I think it was some studies in the early 90s found that the VIA accounted for about 3% of the Swiss economy. So again, this is additional economic activity that's taking place. If these businesses were trading a Bristol pound or cryptocurrency, this wouldn't be additional activity. They would just be changing their weird francs into those their francs into cryptocurrency to do some transactions. So what is shown here is that adding this additional currency to businesses, this gives them something they can spend. It means that if there's tough times, they can spend the credit line within the VIA, and if there's when the times start to get better, they can pay down the VIA. And this again is shown through economic analysis of the VIA over the since the 1930s. This has been shown to be counter-cyclical to economic activity in the Swiss economy. E.g., when the Swiss economy does badly, the VIA does better, and then so it balances out the downsides within the wider economy. What is interesting about VIA is obviously it had seemed to be quite a unique situation, and it's quite a difficult thing to get going. However, in 2009, 2010, after the financial crisis, or the last financial crisis, some guys in Sardinia, Italy, started to try and replicate VIA They were featured in a Financial Times article, which is worth having a look at if you're interested in this type of thing. And from sort of 2010 onwards, they then found they were exponentially scaling their mutual credit system called Sardex. And again, some sort of figures that are, sorry, a little bit blurry at the bottom, but they were sort of doubling every year. And they were finding that what they were providing to businesses essentially was this additional liquidity, that the euro crisis was really causing some problems in Sardinia. And what Sardex offered was this new source of liquidity amongst the sort of network of businesses. Over this time, Sardex grew from a couple of businesses up to about 4,500 in Sardinia. And then over the last couple of years, they've now started to spread this across Italy. This is actually now a bit of an outdated map. So they've also got into Sicily and also the other northern Italian regions. An interesting one for the West Midlands and Birmingham is Venetex, which is northeast Italy, sort of where Venice is. It's interesting because North Italy is very similar to the West Midlands economy, where Sardinia is more similar to sort of the northern Welsh economy. And you know, in Venetex, they're finding that actually they're growing faster than the original one, that they're getting more things like manufacturing supply chains, they're getting production within this, they're getting all the sort of things that are available in the West Midlands, trading using this parallel currency. Again, all the rules are the same, that businesses come on, they use a zero interest overdraft to do transactions. It gives them this additional source of liquidity, and getting that arrangement in place where you've got a network of trusted businesses doing these transactions is a very effective way to get an alternative currency to move, because it's starting to fill a need amongst these businesses, which is lack of liquidity and also a new marketplace for them to sell their goods in. So in the name of science, I unfortunately had to go out to Sardinia twice to go and have a look at how Sardex was operating. So I went out in late 2018, early 2019 with my colleague Matteo Fanzini, who did all the translations. We interviewed 80 business owners across Sardinia and try and understand how their business operates, how it uses Sardex, what are the benefits of using Sardex. You know, what their feelings are with Sardex. And I thought I'd just give a couple of examples of how this was starting to be integrated. So the main focus of Sardex was B2B. So there was quite a few businesses, again, like you see in Birmingham, it's accountants, it's solicitors, marketing firms, etc., who are doing transactions using Sardex and doing these sort of additional transactions locally. But then there's also the development of more supply chains within Sardex. So that you were seeing companies starting to vertically integrate this currency within their supply chains. In 2014-ish, businesses were coming back to Sardex and saying, this is all great, but there's only so many things I can spend my Sardex on. Can I start taking this as pay? And what Sardex then did was developed a project called Business to Employee. And it meant that employees, starting with the business owners themselves, were starting to accept some Sardex as pay and remuneration, which then sort of opened up a bunch of more retail type businesses. So a business might do €1,000 worth of marketing activities, and then of that 1,000 they might take 500 as remuneration, as pay, and then they would go and spend that in local grocers and local cafes and restaurants and go and get their hair cut. And in the case of the right hand one, there's a memory foam mattress producer on the island of Sardinia who's got 12 retail businesses across the island, and you can walk into there and buy a memory foam mattress for a couple of €1,000 completely in Sardex. And he had started to integrate Sardex into his supply chain, so that he was paying parts of his staff, he was buying some machine tools, he was buying things around the warehouses and such things. And then from those who are interested in the development of sort of clean tech and you know, addressing sort of the climate crisis, there was the development of renewable energy and energy efficiency supply chains using Sardex as well. So the business owner on the left that I interviewed, he offers businesses the ability to to invest in renewable energy and improve the energy efficiency of their business premises. He termed it, you give me Sardex, I'll give you euros. And what he meant by that was, if you paid him in Sardex to put solar panels on your roof, you were then saving euros from your electricity bill that you were keeping for yourself, essentially. And again, there were some interesting examples of this being done around Sardinia. And then how that then again filters down is that you've got businesses paying staff, and only partially, again, what we're talking about here, well, saying that some businesses are reporting an extra 2.5% additional trade, when actually other businesses was as high as 25% of their turnover was in Sardex. The guy on the left had earned so much Sardex because he had his dentist, he's the dentistry, and the people from all the local area, all the business owners were going there to get their dentistry done. He earned so much Sardex that he, when he redid his premises, he used Sardex to renovate his new premises. So that meant there had to be construction supply chains and plasterers and electricians and all that sort of side of it, all within the Sardex network. And again, that's completely available. And then on the right, that was an interesting example of a supermarket who was paying their staff partially in Sardex. And this was credited within some academic analysis of the Sardex network for reducing unemployment in the depths of the Euro crisis, because some of the staff were happy to accept some of their pay in Sardex. Me and Matteo did actually a little bit of a focus group with some of the staff, and they actually came across quite positive about it. They enjoyed spending it in local businesses. In fact, they got their Sardex their pay from Sardex at the beginning of the month, so it meant they could spend it, and then had to wait halfway through the month for the rest of the euros. And considering essentially they're working for an alternative currency, it was quite a positive feedback from how they, from using Sardex and participating within the Sardex network. So Parity, so everything above is essentially the basis of my research with the University of Birmingham. And then Parity was a spin out from the University of Birmingham, which we tried tried to develop this network here in Birmingham. What we've found so far is, we've got 22 businesses using the local currency in and around Birmingham. And I'll just sort of explain how that's come into being and how we've developed that. So to begin with, there's 3 of us on our team. We've got Max Edwards, who has got a background in developing technology. So he's built banking platforms for Barclays. He's been advisors on tech projects. Matteo Vancini, he's worked out in Sardex, understands Sardex through and through. And then myself, who are doing a PhD in this space. And between us, we've sort of developed the operational processes for Parity and also the technology, and have taken that offer to market. So at the beginning of the year, we launched Parity in the jewelry quarter in Birmingham, and we've got a few sort of local walk-in businesses like a pub and a few marketing type firms and a brewery that accepts the Parity as payments. We've developed a bit of a tech offer to allow them to do transactions and participate within our network. And slowly but surely over the course of the year, although coronavirus did slow these things down a little bit, we've been developing our network and getting the tech offer right, and starting to bring companies on from across the West Midlands. We had a piece of research done by the Greater Birmingham Solihull Local Enterprise Partnership, who went out to the people who were using Parity, and also entrepreneurs that who hadn't used Parity but may have heard of us in the local area. And they came back saying that entrepreneurs highlighted 3 things that they wanted to see within the Parity network, which allowed us to sort of guide our development from beyond this point. They said that they had didn't have an understanding of the spendability of Parity. So where could they spend it? How could they spend it? Who could they spend it with? Even though there was a directory of members, They weren't sure what do they do? Do they ring them up? Do they ask them? Do they quote them in parity, whatever it might be? An idea of control. They said, look, I'm happy to participate, but I don't want someone ringing me up and wanting £10,000 worth of work in this. Like, I need control over what I'm posting, what I'm offering to the network, what I'm happy to accept the currency for. And then there was just a usability thing, like with every business, new business, how do I use it? How do I participate? What do I do about taxes? How do I integrate this into my business? So what the project from the LEC allowed us to do was understand what businesses want, and then to start develop the tech offer and to meet these needs. And this is essentially something that went live a couple of months ago, but we took the feedback from the entrepreneurs, and we built essentially a local currency marketplace for businesses in Birmingham. And what this allowed them to do was to meet all three of those requirements. So the spendability element, it meant that everybody who participates within Parity can now see what is available to buy using the local currency. So they've got, all this sort of services, PPC training, SEO training. They can hire function rooms, they can get accounting support, they can get HR support, public relations support. They can do it all using the Parity and the Parity overdraft and credit facility. And then from that, from a control, let's start from a control element. Businesses were saying with the marketplace, it meant I can just post what I'm happy to do. And one thing that came up was the idea that for some more expensive products, they're happy to accept maybe 50-50 of the currency. So to give you an example of how this kind of works, Kinetic Communications is a PR firm based in the Jewelry Quarter, and she uses this marketplace quite well. She's using businesses on the network can go to her with their zero interest overdraft and spend essentially IOUs to get a public relation starter pack support, 2-hour session to develop a PR plan. And they can do that without spending pounds. They can do that completely spending with the overdraft with the credit line in Parity. The blogs and media support, again, the same kind of thing, completely in the currency, but that's charged monthly. So if you want her to help you promote yourself over social media or whatever it might be, she's happy to accept £250 worth of Parity every month, and for her service. And then for a little bit more expensive services, so her case studies that she writes are £500, but she's happy to accept 50-50 essentially, 250 in the currency, £250 actual pounds. And for that you get £500 worth of work. And then what the businesses, when they started posting themselves on our marketplace, they started saying, could we put free things on here? And I don't mean stuff in the currency, I mean actual free services. And what we found, a lot of businesses started posting free, is your company worth a free editorial? And the reason for this is it comes to the heart of what small businesses in Birmingham and elsewhere want, and essentially is to meet new clients. What these businesses are now using Parity to do is to do a little bit of work in maybe their introductory offers, to sort of meet new people, build relationships, and connect to them, show their value, show what they can do. But then hopefully that will then lead on to bigger work. So in the case of Kinetic Communications, some of her more expensive products are not on the marketplace, because the idea is maybe they will get to know her, realize she's great at what she does, and then when they do need the more expensive products, she's able to upsell those in pounds. So it becomes a very sort of effective tool to meet people locally, acquire what you need, and then also meet sort of new local customers. Another element that we adapted based on feedback was the kind of usability element, and that was businesses are a bit unsure about joining something that was so new. So based on the advice back from the local enterprise partnership, we changed the pricing offer, and the idea was that businesses could join completely for free and get up to £500 worth of overdraft. They could post a couple of listings on the marketplace and just see how it works, so they can do some spending They can see that they're being introduced into new customers, and then if they want to get a bigger overdraft, do more, post more listings, get sales support, get purchasing advice, that's when we start charging. So again, the feedback was to sort of move this down in the direction of more of like a freemium offer. And then finally, which I won't go through today because I suppose from this talk you've kind of got an idea of how it works, but it was just like trying to explain more about how it works, and producing videos and getting people to understand you know, how the currency operates. And just noticed a question on the screen, just to go over it again. The idea is that if businesses upgrade into a £35 a month, it means they get us helping them promote their products out to the network, so they're getting additional sales support. It's also, we go through them their business to try and find things they can spend in Parity. So again, right now it'd be free, and that would allow them to £3 up if they can source their marketing support, and they can source their accounting support through Parity. That's pounds that they no longer have to spend. And then of course you've got the additional overdraft, which means you can buy bigger purchases, you can use more of it. And again, the advice from the left was this idea of kind of you know, try it out, and then if you want more, that's when you upgrade and start to and do more within Parity. So to answer the question of how does Parity support innovation and collaboration between entrepreneurs in Birmingham, well, what we're doing is taking a very effective alternative currency model based on Sardex and VIA, which, as I've shown at the beginning of this presentation, is kind of grounded in better understandings of how money actually came into existence and how money actually works, and providing that as a tool to business owners in Birmingham. So businesses can post on our marketplace, they can do this additional trade. That local, that spending power that they get in from Parity, because again, that overdraft is new money that's being created. They don't need to convert anything into anything. It's an additional credit line, which means it's new liquidity. It means there's local spending power. There's more money that's circulating locally. From the perspective of like an entrepreneur just starting up, if they haven't got cash, it means that they can collaborate without cash. They can come onto the marketplace, they can post their own offers, they could use the credit line to buy from other businesses within the marketplace, and they could sell their products later in the year to pay that back. And then what is found, you know, is that without the medium exchange or without money in circulation, essentially businesses find themselves with a spare capacity. And the idea here is that if you give a credit line to businesses within an alternative currency, that gives them more liquidity to do more with, and therefore unleash more potential. So that was a bit of a whistle-stop tour, and I think we've got about 10 minutes until the end, which I'm happy to sort of answer any questions or go through anything that you want me to go back through. How you can support our development. So you can follow us and promote us on social media. You can let us blog and do guest articles on your websites. You can think about what businesses could benefit locally, and you can promote Parity out to your networks. So that obviously would help us get the message out and get some sort of support, you know, support us sort of develop. And then other than that, you can follow us on Parity_network, and you can follow us on LinkedIn. I think that is everything. I think there's a couple of questions that might have come up. So the first question I've answered, 35, the pricing structure. Next question from Mark Howells. Do you have a link to the white paper outlining the tokenomics of the Parity token? Possibly, Mark, that you didn't arrive at the beginning of the presentation. The idea of the currency is that it doesn't sort of operate like a commodity token. It's more based on credit. So a business can come on to Parity and spend a couple of £1,000s within the credit line and buy what they need, opposed to sort of purchasing a token to sort of then spend that token into circulation. I think what you mean by the sort of tokenomics is when things like networks like Bitcoin have to plan for how many tokens are being created each year, and in a way to like encourage usage. Again, we don't need to do that. Where we create money is when people spend. So if somebody buys that marketing support, as you've just seen, for £250, they go negative in their overdraft by 250. As Kinetic Communications receives 250, which she then can spend in the local area, and then you have to sell into your network, sell into the network to recover your balance. If I haven't answered it, just like redo the question. I'm happy for you to do that. Where do you see Paritex or Parity in the next 3 years, and what would be the biggest challenge? So the biggest challenge over the last year or so has been explaining how the hell it works. And again, this was the feeling from Sardex and Sardinia as well. They sort of said for the first 2 years it was absolute hell explaining how this how it actually operates. What we seem to have got to a point now, we've got a small network, 22 businesses using it. We're getting a slow trickle of businesses come on. But the crucial thing about that is we're starting to confirm our sales processes. So literally the weekend, we've had a business just come onto the website and sign up that we've never spoken to. So that's becoming more of like an inbound sales process. What we hope to see over the next 3 years is to start to see the types of growth that we're seeing in Italy. What they did see is when you get more businesses on, there's more products and services available, and then therefore you go through this kind of exponential growth curve. If we could scale it to the same size as like relative to the economy as the Italians and the Swiss, you'd be looking at about £210 million worth of transactions each year, and you'd have about 17,500 small businesses across the West Midlands using Parity as an additional marketplace and additional source of liquidity. How we're starting to try and get to some of these challenges, our tech offer now is moving towards the idea of like a challenger bank approach, where I don't know if anyone's downloaded, like uses Revolut or Starling Bank or one of the others, where the offers move towards you download the app and then you start. And again, within the next month or so, our new platform will be live, where a business owner can just download the app, sign up, post listings through the app on the marketplace, meet business locally, and really put that control, as it was asked, back into the hands of the entrepreneur. And we're hoping that sort of tech development will help us do that. Next question from Becky Floyd. What sorts of businesses would you like to recruit to the network? So the outcome of the work with the LEP, the Greater Birmingham LEP, was they thought that the 3 types of businesses that will find this useful right now is sort of retailers, which we're finding that because again, footfall for them has dropped off a cliff. So under this model, a retailer could post maybe some of their special offers on the marketplace, which gets people through the door, and then they could upsell other products in pounds or whatever it might be. So we're starting to engage with retailers in the Jewellery Quarter and wider in Birmingham. Another type of business that was finding this interesting was food and beverage. And again, we've got a pub and a brewery on the network already, and a catering firm on the network already. But again, what the pub's doing is happy. Anyone's happy to take all Parity for drinks, but if you want food, then it's 50-50. So we've had a networking event there where businesses in Parity have gone there and they've bought their rounds of beer completely using the currency, and then he's able to spend that locally on his own services and also from the brewery. And the final area of companies that we think are interested right now is basically professional services. People who are offering services based on time. I think pretty much the majority of the business on the network at the moment are these types of businesses where they're selling marketing, PR, IT services, and it's because it means they're happy to offer some value into the network, and then they can buy locally. We're also finding a sort of more of a broader category that the types of businesses that seem to be participating are ones that are more interested in things like local trade and supporting like ethical businesses and sort of with a bit of an environmental slant. So again, those types of businesses seem quite acceptance to this. And again, that was the feedback from Sardex, was at first focus on those types of firms And then once you've got a bit of a critical mass, more traditional SMEs start to find you interesting. I hope that answers that. It's going quick. Fantastic. Video. I think that's all the questions. As Matteo, my colleague, is saying, we'll post the video online anyway. I think it's going to be online through Birmingham Tech Week. I appreciate it's it was quite a quick talk, but again, we're happy to answer any more questions about all of these concepts. And like I say, you can follow our developments on through social media and by connecting with us on LinkedIn. If you're interested in anything more, or if you're a business owner that's interested in joining Parity and posting your goods and services on the marketplace, feel free to sign up to a free demo or just sign up online.